It seems that more and more investors are turning to real estate, and most start out with single-family rentals. The first decision to be made is whether to be a landlord and lease the property to a tenant, the traditional approach, or become the host of a vacation rental using online platforms like Airbnb to provide your guests. Which one will make you the most money with the least hassle? Well, that is the question we'll be tackling in this video.
Welcome to Rock Real Estate with Stu Simone, where we make real estate informative and fun. And now, here's your associate broker, real estate attorney, and mortgage loan originator, Stu Simone.
Welcome back to our channel, where we give you the lowdown on different aspects of real estate, not only as a place to live, but a place to make money. Today, we'll dive into the world of buy and hold real estate investing and compare the pros and cons of short-term rentals versus long-term rentals. If you're considering investing in income rental property, this video is for you. We'll take a closer look at the advantages and disadvantages of each strategy so you can choose the best approach for each property. All right, let's get started. Well, not so long ago, if you wanted to make money from owning real estate, your only choice was to become a landlord. Most landlords use a one-year renewable lease, and many have been lucky to have the same tenants for years. And if you wanted to spend that rental income on a vacation, you would have stayed at a hotel. Or maybe if you were adventurous, you might have tried out a bed and breakfast. But in October 2007, Brian Chesky and Joe Gebbia welcomed 3 guests to their San Francisco home using a new online platform they created. And both the hospitality business and buy and hold residential real estate investing were changed forever. Airbnb now has over 4 million hosts in more than 220 countries, with an average of 6.6 million active listings. In 2022, U.S. short-term rentals earned over $62 billion in revenue, a 25% year-over-year increase. According to a July 22 update on the U.S. short-term rental industry by AirDNA, there were 1.06 million available units on various listing platforms in 2021. So clearly, Airbnb, HomeAway, VRBO, and others have made the vacation rental business a mature industry that rivals traditional residential leasing. So what are these owners earning? Airbnb reported that typical U.S. Airbnb host earned $14,000 in 2022, which was about 20% of the average owner's income, according to VRMA. Evolve Vacation Rental Network found that one-bedroom vacation rentals earn about $39,000 per year, while 3-bedroom rentals earn around $99,000. Statistica.com found that the average revenue per user, the ARPU, currently amounts to $438. Now that we have this idea of what kind of income we're talking about, let's look at the advantages of short-term rentals. Number 1, higher income potential. Vacation rentals often generate more rental income compared to long-term rentals. Obviously, if you rent out on a per-night basis like a hotel, your daily rate will be much higher than that of a residential lease. 2, tax deductions. Short-term rentals offer more opportunities for multiple tax deductions, including cleaning and maintenance fees, insurance, and property management expenses. These deductions can help offset the higher costs of operating and maintaining a short-term rental property. 3, manageable tenant issues. STRs usually involve transient guests who are vetted through review systems. Although not foolproof, these systems tend to reduce the risk of long-term tenant issues such as non-payment, property damage, or that dreaded eviction process. 4, market responsiveness. Short-term rentals allow investors to quickly adapt to changing market conditions and adjust rental rates accordingly. They can take advantage of high demand periods and events to maximize their rental income. During peak seasons or events, short-term rentals can command premium rates. For example, if you own a vacation rental near a ski resort and Mother Nature kindly dumps record snowfall, and usually late in the season, you would simply raise your rates for those weeks to take full advantage of the temporary increase in demand. 5, flexibility and personal use. Short-term rentals provide flexibility for owners who want occasional access to their properties. They can block off dates for personal use while still generating income from the property. This flexibility is especially appealing for vacation homes or second homes. For example, I like the idea of having a short-term rental property near Disney World in the Orlando, Florida area. Then whenever you want to take that Florida vacation to Disney World or the beaches or whatever, you would have a free lodging at your rental. According to VRM Intel, 49% of vacation home buyers plan to use their property for vacations or as a family retreat. All right, how about the disadvantages of short-term rentals? 1. Income unpredictability. Short-term rentals experience higher vacancy rates overall and last-minute cancellations, making income less predictable compared to long-term rentals. Fluctuating demand and seasonal variations can impact the occupancy and revenue of short-term rental properties. Not only that, but the vacation rental market can be a risky venture for property owners during a recession or other changing economic time. 2. Higher operating expenses. Maintaining a short-term rental requires regular cleaning, restocking, and managing utility expenses. This can be more time-consuming and costly compared to long-term rentals. Additionally, advertising and listing fees on rental platforms can eat into your profit margin. 3. Stricter regulations. Short-term rentals are subject to local laws and regulations that may limit occupancy, duration, and require additional taxes or permits. For example, the city of Los Angeles heavily regulates short-term rentals to the point where you need to live in the property and share your kitchen with a guest, kind of like an old-fashioned bed and breakfast. Investors must stay informed and compliant with these regulations, which can vary and even change from one jurisdiction to the other. More on that later. 4. Increased management responsibilities. Short-term rentals often require more hands-on management, including guest communication, check-ins, and providing amenities. If you're not prepared to handle all these day-to-day responsibilities or hire a property management company, it can be very challenging to maintain the property effectively. And if you do hire a property manager, their rates will be about double that of long-term rental property managers. Now let's turn our attention to long-term rentals, which have been the traditional choice for real estate investors. What are the advantages and disadvantages of this rental strategy? Well, here are the advantages. Number 1, predictable income. Long-term rentals provide consistent cash flow throughout the year, making it easier to budget and forecast returns on investment. With stable, reliable tenants on longer leases, landlords can expect regular rental payments. 2, easier financing on the purchase. Lenders often view long-term rentals as less risky, offering more favorable interest rates and financing terms. This makes it easier for investors to secure financing and expand their rental property portfolio. 3. Lower operating expenses. Tenants in long-term rentals are responsible for most utilities, maintenance, and repairs, reducing the landlord's ongoing costs. Additionally, long-term tenants generally have a vested interest in maintaining the property. It's their home, right? Resulting in fewer instances of property damage. 4. Reduced turnover costs. Long-term rentals typically have lower turnover rates compared to short-term rentals. With fewer vacancies, landlords save money on advertising, cleaning, and preparing the property for new tenants. 5. Stable rental market. Long-term rentals are usually in high demand just about anywhere in California, as we have and should continue to have a housing shortage here. That means if a tenant does move out, you should be able to quickly replace them with a new one. Alright, the disadvantages of long-term rentals include 1. Lower rental income. Long-term rentals generally yield lower rental income compared to short-term rentals. The rates are less flexible as landlords need to wait until the lease renewal period to adjust the rental rate, potentially missing out on higher market rates. And California has state rent control, which limits the amount and number of rent increases per year. 2. Potential difficult tenants. While long-term rentals generally involve more stable tenants, there is still a risk of problematic tenants who can cause property damage, late on their rent, or stop paying rent, or have violations of the lease. And in a state with tenant-friendly laws like California, and in cities and counties with rent control like Los Angeles, it can be a months-long nightmare to try to evict a non-paying tenant, and there is no way to recoup the months of lost income. Now, one important consideration for those thinking about vacation rentals, many cities discourage or flat out ban short-term rentals. So if you're considering this strategy, the first thing you need to do is research the local city codes and regulations and get the most current information about local hospitality-related topics. One important consideration for those thinking about vacation rentals. Many cities discourage or flat out ban short-term rentals. So if you're considering this strategy, the first thing you need to do is research the local city codes and regulations and get the most current information about local hospitality-related topics. For example, Big Bear Lake, California. It's a year-round vacation rental area with ski resorts, hiking trails, and a large lake. Came close to banning new short-term rentals, but the most recent city council vote a few years ago fell short. Or if you've been thinking of short-term renting in the Coachella Valley, you'd best do your research. The cities of Palm Springs, Rancho Mirage, Desert Hot Springs, Cathedral City, Indio, and La Quinta have all gone back and forth with the rules over the years, with outright bans on vacation rentals coming close to passing. So it'd be wise to research the trends and attitudes of the city. You wouldn't want to buy a property to be a short-term rental only to have the city pass strict new regulations a short time later. That would be a short-time failure causing you to fall short of your investing goals. So whether you're considering a short-term or long-term rental, it's essential to weigh the pros and cons that we've discussed. Let's recap by directly comparing the two sides according to some important considerations. Regarding income, long-term rentals provide stable income and lower management demands, but may have limitations in rental price adjustments and lease terms if there's rent control, such as we have in California. Short-term rentals offer higher income potential and flexibility, but the income can be more unpredictable. Now, the location of the property is critical here. If the area is a year-round destination, then a short-term rental is much more likely to realize that high potential. And speaking of location, here's an interesting factoid. According to VRBO, demand for cabin rentals is up 25% year over year, and demand for chalets is up 20%. 61% of families responding to their survey said that they were more likely to pick an outdoorsy destination than a city for their next trip. Some of Airbnb's fastest growing markets include Big Bear, California, up 73%, and Lake Tahoe, California, up 67%. In contrast, demand for short-term rentals in New York City is down 55%. Okay, how about maintenance and expenses? Short-term rentals will have much more as you need to refresh the premises after every guest, pay Airbnb or VRBO fees, probably get a license from the county or city, and pay for not only utilities, but cable and landscaping. You'll be hiring a property manager. Their fees would be about double what a property manager for a leased property would be, somewhere around 20% of your income. However, I should mention that the trend is for STR guests to stay longer. Stays over 1 week have doubled since 2019, accounting for 70% of bookings according to AirDNA. So both short-term and long-term rentals have their own advantages and disadvantages. The choice between the two depends on your investment goals, property location, local regulations, and personal preferences. Some investors choose a hybrid approach, diversifying their portfolio with a mix of short-term and long-term rentals. Remember, it's essential to thoroughly research your target market, assess your risk tolerance, and carefully evaluate the financial feasibility of each strategy for that particular property before making a decision. With proper planning and execution, real estate investing should be a profitable venture whether you opt for a short-term or long-term rental approach. Thank you for joining us today. We hope that this comparison has provided valuable insights into short-term and long-term rental investments. If you have any further questions or topics you'd like us to cover, please let us know in the comments below. Until next time, happy investing, and stick around for the next video here at Rock Real Estate, where we maximize your most important investment.